Hello everyone, Charles here. And in today's presentation, we're going to continue our journey on the harmonic patterns guide and cover part 5 of a 10-part series. Today we will talk about how to trade the Gartley harmonic pattern. As with all presentations, we must start with a disclaimer. Feel free to pause the video and read through the entire disclaimer, but when trading any financial asset, there's a possibility you may sustain a partial or total loss of your investment funds. As a result, it is advised you should never invest with or trade upon money which you cannot afford to lose through this manner of trading. Trading involves a real risk of loss, and past performance does not ensure future results. So let's get started. The Gartley Harmonic Pattern Trading Strategy is created by H.M. Gartley. The Gartley chart patterns are utilized for technical analysis as well as are renowned for using Fibonacci ratios and numbers. It is a reversal chart pattern that offers clear rules in addition to excellent rewards. How to trade them. Like any other pattern trading, the Gartley pattern trading also entails identifying the right methodology for entry. Typically, one should enter only after a confirmation or when there is a break in the momentum. The Gartley pattern should fulfill the below mentioned Fibonacci rules. AB, this point to this point, or this point to this point, retracing to 0.618 Fibonacci level of XA. So we have XA, XA. Okay, that means that AB has retraced, okay, to the 0.618 Fibonacci level of XA. Okay, so here's where the pattern started. Price came up and then it retraced. Okay, if you're not familiar with the term retrace, please check out slicktrade.net and opt into our free education portal. There you can learn all about Forex, Nadex, and other trading. BC. BC. Remember, B is the eye of the pattern, okay? B is the eye of that pattern, okay? It should be minimum of 38.2% to a maximum of 78.6%. And that is the level of the AB leg, okay? So AB, now BC, should be the minimum right here of 38.2 to a maximum of 78.6. Okay, so that just means that price first started here, came up, it retraced that AB line, and then came up again to continue forming that M, or down to continue forming the W, all right? And 38.2 to 78.6. Now, some people say 88.6 as well, right? I have heard that. All traders have found different rules that work the best for these for trading harmonic patterns, okay? You will see some difference in percentages. They're all pretty close to each other. I would personally recommend trading demo, looking back on the charts. History tells a ton. See what works best, okay? Or use a harmonic indicator or expert advisor and go back and look at those, okay? They will automatically tell you the results based on X amount of trades, okay? Or many of them will. So C to D must pose a target that is anywhere between 1.27 to 1.618, okay? That's where this 127.2% and 161.8% comes from, okay, of a Fibonacci extension, okay, of the AB leg, okay, or a target of the 0.786 or 78.6% of the XA leg. Okay, so that is where CD comes down here, and it must pose a target that is anywhere between 1.27 to 1.618, the Fibonacci extension of the AB leg. So here, see, here's your AB, here's your where your price is going to be headed, okay, if the pattern fulfills properly, and you would be looking at a target, so a target somewhere in here, okay, of that XA leg, okay. Things to remember: Gartley patterns which result in double bottoms and double tops are excellent indication of market reversals. Traders must understand that the Gartley pattern gives us a potential point of entry and does not tell us much regarding where we should place a stop loss order or our target zone. The use of harmonic pattern indicator or knowledge of price action will help to give you a clear understanding of where to set each. If you're not familiar with price action, if you're new to Forex, any of that, please feel free to check out slicktrade.net and opt into our free trading education portal. So stop loss. Okay, in the example above, you would place your stop loss below the D level or last pivot point. Okay, here's our pivot points. You have X, A, B. B is the I, C, and D. Okay, so those are your pivot points. Okay, this is the start of the pattern. This is the end of the pattern. Okay, so you would place your stop below that D level. I like to leave a little bit of a cushion. Okay, I don't place it directly at that, okay. That's just me personally. That's what I have found has worked. So that is what I do. For your take profit levels or target zone, okay, here's the same example. You'd place your take profit 1 around the 220 range, okay. Here's D. Your stop loss would be just below that D level, okay. Now some would say B would be your first target, but that doesn't give you hardly any room, okay. So what I would do is do the 220 level, which is in between those pivot points of ACB, okay, as a target 1. And if you're familiar with price action, you see this is a level where price has come up, has bounced. It has bounced down and up, broke through. This is where you see price fluctuating in between, okay? So that's where I would put my take profit 1. Take profit 2, I would set at the C level, okay, or 230. And take profit 3 at the A level, which isn't much further, but it is almost up to 235. Once you get up to this point, I'd recommend trailing your stop to get the maximum pip potential. Okay, so that's it. In my next presentation, we'll cover the crab harmonic pattern. If you're liking this series so far, please feel free to subscribe to our channel, like, share, or comment on our videos in the comment section below. And we will see you soon. Thank you.